We're looking at Lithium Americas Corp, ticker LAC. And as of this moment, the stock is trading at $6.10, showing a sharp decline of about 9.23% in intraday trading. That steep drop today is the immediate reality for anyone holding or looking at LAC, and it cuts right against the major narrative that has driven this stock recently, the idea of a fully de-risked, government-backed play on domestic critical minerals. The immediate insight here, the thing most people are missing when they see a 9% single-day drop, is that this kind of volatility isn't just a reaction to a bad headline. It's the market repricing two distinct and conflicting forces, the rock-solid political security of the Thacker Pass project versus the still fluid, deeply uncertain economics of the broader lithium market. The company recently finalized the amendments for its massive $2.23 billion loan from the U.S. Department of Energy and even received its first drawdown of $435 million, confirming the political will and major funding for its flagship asset. That news, which came in mid-October, sent the stock soaring, embodying the expectation that a government-backed lithium mine in Nevada is essentially a guaranteed American success story. Yet here we are, watching the stock give back a significant chunk of those gains, not because the DOE loan vanished, but because the reality of soft lithium prices and the continuous need for non-dilutive financing in a capital-intensive construction phase is asserting itself. The expectation is that government support makes the stock a sure thing. The reality is that Lithium Americas is still a construction and development company, and the market for the material it will produce is under pressure right now. The common ground for investors is clear. Lithium Americas is arguably the most strategically important domestic lithium play in the United States, centered on the Thacker Pass project in Nevada, which holds one of the world's largest known lithium resources. The narrative is that this is a direct play on the domestic supply chain push for electric vehicles, the battery revolution, if you will, supported directly by the U.S. government and a major automaker, General Motors. It's the antithesis of depending on foreign sources, aligning perfectly with the national security and climate agenda. However, the contrarian take, the deeper reality, is that this politicization of the commodity is both its greatest strength and its primary source of current stock volatility. When the stock spiked after the DOE loan confirmation and the related equity stake the government took, it did so on political de-risking. The recent pullback, which is sharp on high volume, we're seeing millions of shares trading hands today, indicates that investors are taking profits following the confirmation of financing, and institutional players are reassessing the timing of first production, which is still a few years out, currently targeted for 2028 for Phase 1. This reassessment is happening against a backdrop of lithium carbonate prices globally remaining soft, a direct challenge to the profitability model even with the massive resource at Thacker Pass. Looking closer at the recent stock movement, the dramatic spikes we saw following the DOE loan finalization have a clear institutional footprint. Large investment firms and hedge funds often buy aggressively on catalyst confirmation, pushing the stock up quickly, then scale back on their positions once the immediate news-driven momentum wanes, especially when the underlying commodity price environment isn't cooperating. This current downward move is not a signal that the Thacker Pass project itself is in jeopardy, but rather a reflection of capital rotating out of the news trade and back into a valuation-based trade where a development stage company with no current revenue is subject to greater scrutiny, especially in a higher interest rate environment. The market is weighing the value of a massive, long-life, secured resource against the net present value discount applied to a project that won't see significant cash flow for several years. High daily trading volume, like the millions of shares we're seeing today, suggests a substantial disagreement between short-term traders looking to scalp gains from news cycles and long-term resource investors focused on the multi-decade lifespan of the mine. This tension between short-term technical selling and long-term fundamental backing is what creates the severe daily swings in a stock like LAC. The core of Lithium Americas' business, of course, is the development of Thacker Pass. This isn't just any mine. It's slated to be an open-pit mine extracting lithium from clay, which is a different process than brine or hard rock mining and comes with its own technical risks and potential cost advantages. The Phase 1 goal of 40,000 tons per year of battery-quality lithium carbonate is significant, and the joint venture with General Motors, which includes an exclusive 20-year offtake agreement for all of Phase 1 production, provides a critical anchor for the business model. This contract with GM is the second layer of de-risking after the DOE loan. It secures a buyer for the majority of the initial output, insulating the company somewhat from short-term market price volatility once production starts. However, the focus remains on the immense capital expenditure required to get to that point. The recent at-the-market equity program, where the company sold additional shares to raise capital, is a reminder of this perpetual need for funding, and any equity issuance, even for a strategic cause, is dilutive to existing shareholders. This dilution adds to the downward pressure on the stock when the primary news cycle, the DOE loan, is already priced in. Investors need to understand that investing in a pure-play development resource stock like this is a different proposition than trading established producers or even comparing it to tech-focused names like Tesla stock or NVIDIA stock. It's about permitting, construction timelines, commodity cycles, and capital structure, not quarterly iPhone sales or AI chip performance. If you are managing your own portfolio, whether through an individual brokerage like Fidelity or a simpler platform like Robinhood, you need to treat this stock with the specialized knowledge it requires. The broader macroeconomic environment is also a major headwind right now. The rapid expansion of electric vehicle manufacturing capacity globally, which is the ultimate demand driver for LAC, has created a temporary oversupply in the lithium market, leading to depressed prices. This affects the immediate sentiment around all lithium investment plays. While the long-term outlook for lithium demand is virtually consensus-driven, everyone agrees it will go up, the short-term price pressure is a factor that the equity markets cannot ignore. The market is constantly adjusting the perceived terminal value of Thacker Pass based on today's lithium price, which is a flawed but unavoidable psychological mechanism. Furthermore, the complexities of the permitting process, despite the federal government's firm backing, still pose legal and environmental challenges, albeit greatly reduced. Any adverse ruling or major construction delay, which are inherent risks in large-scale mining investment, could trigger another significant pullback. The market is priced for perfect execution on the construction timeline, and any hint of a delay could be punished severely. Now let's look at the future and what the tension between expectation and reality means going forward. The expectation is that Lithium Americas is on a clear, government-paved path to becoming the dominant U.S. lithium producer, a multi-bagger stock that will power the domestic EV industry. The reality is the path is paved with ongoing construction risk, the potential for further equity dilution to cover overruns, and continued exposure to the cyclicality of lithium prices until Phase 1 production is stable and profitable. A major catalyst to watch for, the thing that could swing the pendulum back toward the positive expectation, would be a definitive announcement of the final investment decision for Phase 2 of Thacker Pass, or even better, a substantial and sustained upturn in the benchmark price of lithium carbonate. An unexpected surprise on the construction front, such as an announcement that they are ahead of the 2028 production schedule, would also dramatically exceed market expectations. On the risk side, the current reality of soft commodity pricing means that institutional investors are likely watching the company's cash burn rate very closely in upcoming financial reports, which are mostly about spending on construction rather than revenue generation. Any suggestion of a capital shortfall that necessitates another large-scale equity raise could severely dampen sentiment, especially for retail investors managing their online investment accounts on platforms like SoFi Invest or using a more sophisticated interactive brokers trading platform. The question for every investor here is, are you buying the political and strategic security of the project, or are you betting on a near-term surge in the price of lithium? Right now, the price action suggests that latter bet is being trimmed. The long-term bet on strategic value, however, is what keeps the stock from falling completely off a cliff, supported by the massive scale of the resource itself. If you are leveraging intelligent portfolio services like Schwab Intelligent Portfolios or exploring different Fidelity ETFs that include lithium exposure, you'll see this LAC volatility reflected in their performance. You need to decide if this deep cyclicality is a buying opportunity for the long run or a sign to wait for a clearer commodity price trend. To drive engagement on this crucial topic, comment below how many shares of Lithium Americas Corp you currently hold, or if you prefer a different stock like Albemarle for lithium exposure. Your answer will give us all a better sense of market conviction at this turbulent time. Whether you use Fidelity Wealth Management for guidance or you're completely self-investing, that number reflects your personal belief in the Thacker Pass story. In summary, the Lithium Americas Corp stock is currently undergoing a painful reality check, trading sharply lower today after a period of intense